Will gold reach 50,000 baht per baht weight next year, in 2025? Someone asked me this question. When people have hope, we look for answers with hope too. Honestly, no one really knows. If we did, we'd all be rich by now. But today, I'll do some homework for you to see if there's a chance we'll see gold hit 50,000 baht next year. First, let me briefly explain the basic principle behind why gold prices go up in this world. It's actually pretty simple. The more people are afraid, the higher gold prices go. And when people stop being afraid, the price of gold will come down on its own. Looking at the current global economic situation, with gold prices just climbing and climbing, even just entering 2024 up to now, gold has already risen by 27%. That means people are pretty scared, and it also shows that the global economic situation right now is not normal. For this video, I've done my homework and I'm going to share with you the 4 main factors that could potentially push gold prices even higher. 50,000 baht next year, or in other words, it could reach $3,000 per ounce. These are the 4 factors: Saudi Arabia, the key player in the Middle East, the United States, China of course, and an update on the possibility that the war could escalate even further. Hello to all the gold millionaires out there. If you're holding on to gold right now, there's really no other way to put it. You're a millionaire, plain and simple. In this video, if you want to support the research on whether it's a good time to buy more gold, whether you should take profits, sell it all, or just hold on to it and sleep soundly, you can support me by using this QR code. All proceeds will go toward encouraging the money team. And it also helps encourage me to keep doing my homework and bringing investment insights to everyone. But if you're not able to scan the QR code, that's totally fine. Just watching until the end already makes me really happy. Wow, gold prices have been surging. This year, it's hit an all-time high 6 times and has gone up 27% since the start of 2024. What's going on? The first factor I want to talk about is Prince MBS of Saudi Arabia. Because Saudi Arabia has quietly accumulated a total of 160 tons of gold in its reserves since 2022. If you look at this chart, this is a chart from the World Gold Council, you'll see that the way Saudi Arabia has been buying gold bars makes it highly likely that these purchases are going straight into the country's reserves. They've been buying a lot, and 2022 was also when Russia invaded Ukraine. Each time they bought, in the first quarter alone, it was about 20 to 30 tons, and they did this for 8 consecutive quarters. That's why this black line here, this is the gold price. It just keeps going up, following the volume, demand, or Saudi Arabia's appetite for gold. And you see, even though later on Saudi Arabia started buying at a steady rate, buying the same amount again and again, the price of gold still shot up steeply. This shows just how significant Saudi Arabia's gold purchases are today. Looking at the graph, you can see that they take this very seriously. They're buying like their lives depend on it. Do you know why? Because they're buying a massive amount of gold, even though their government budget is actually in deficit. But that's not a problem. The government can run a deficit, but they absolutely cannot stop buying gold. And the reason I have to talk about Saudi Arabia's gold hoarding behavior first is because Saudi Arabia plays a hugely important role. They're basically the big brother in the Middle East, right? They're like the AOL of the Middle East. So if Saudi Arabia is aggressively stockpiling gold like this, there's a very high chance that other countries in the Middle East will follow suit. So then, what's the reason Saudi Arabia is buying up so much gold for its reserves? I've already explained in detail before that Saudi Arabia is ready to dump U.S. government bonds if the Western countries, that is, the U.S. and Europe, use the $300 billion seized from Russia after Russia invaded Ukraine. If they use that seized Russian money, Saudi Arabia will dump U.S. government bonds. The United States is taking this approach. I've explained it in detail in that video, so you can go check it out. And just like that, what Saudi Arabia feared happened very quickly. Here's the statement from the President of the European Commission. Ursula von der Leyen recently announced that Ukraine would be given an additional loan worth $39 billion, specifically using the assets seized from Russia as collateral. But let me clarify. Saudi Arabia's recent decision doesn't mean they love or are super loyal to Russia, like, hey, nobody can mess with Russia or I'll retaliate. That's not the actual reason at all. The real reason Saudi Arabia said they would dump those European bonds of the United States if America seizes Russia's money and uses it. That's because this action makes the dollar a lot less trustworthy. It means that the United States and Europe, the Western countries, have the power to just take any money that's in the US dollar system with no guarantee at all that they won't do it. If they can do it to Russia today, tomorrow they could do it to Saudi Arabia. That's what they're thinking. And it means that the day after tomorrow, they could do it to this country or that country. Even a nation like Thailand doesn't have any absolute guarantee that the United States couldn't suddenly seize our money that's currently held in the dollar system. That's the main reason why Saudi Arabia recently dumped its US government bonds and instead swept gold into its own reserves in order to strategically change Saudi Arabia's national reserve currency away from the US dollar to gold instead. So they probably feel safer holding gold instead of dollars. And just recently, Saudi Arabia even joined hands with China. This time, they teamed up to open the door for the creation of the Petro-Yuan. What is the Petro-Yuan? Well, before this, Saudi Arabia had made a petrodollar agreement with the United States a long time ago, which was they made an agreement that if anyone in the world wanted to buy oil from Saudi Arabia, they would have to pay in US dollars. This was one of the main reasons why the US dollar became so strong and turned into the reserve currency for many countries around the world. But today, Saudi Arabia has opened the door to partnering with China, creating the possibility of the Petro-Yuan. It would be similar, though we don't know exactly how alike or different it will be. Still, it seems to be a sign. If anyone wants to buy oil from Saudi Arabia, they would have to exchange their money for yuan first. But we don't know yet how exclusive this agreement will be because it hasn't actually happened yet. If it does happen, though, it would mean that the global demand for the US dollar would decrease. That's because what people really want in this world is oil. It's a commodity, not just paper money that you can print as much as you want, you know? So is it really a surprise that Saudi Arabia would team up with China like this? Honestly, it's not all that surprising because up until now, China has been Saudi Arabia's biggest customer because China buys oil from Saudi Arabia worth up to $54 billion. It's a mutually beneficial relationship. China is Saudi Arabia's top spender. You get it? So to sum up the first factor, Saudi Arabia has been stockpiling a lot of gold in its reserves. The more gold they accumulate, the higher the price of gold goes. Plus, Saudi Arabia is still the leader of the Middle East, which means there's a good chance that other countries in the region will follow their lead. This will be another factor pushing gold prices even higher because the demand for gold will keep increasing. Next, let's talk about China. China is also another major factor driving up gold prices. As we all know, China has been consistently stockpiling gold in its reserves. Even though in the past month or two they've slowed down a bit, it's because China has become a main target of US trade attacks with tariffs and other measures. So China is starting to feel that holding a lot of US dollars isn't safe for them. That's why they've been dumping US government bonds continuously, selling them off rapidly. This graph shows a very steep sell-off. China's dumping of US government bonds is in direct contrast to its gold purchases for reserves. If you look at this chart, you'll see that the amount of gold China has accumulated in its reserves is now almost 5% of the country's total foreign exchange reserves. All right, let's talk about the war. Let's get an update on the war. Because the more people are afraid, the higher the price of gold goes, right? So war is one of the main factors that makes people around the world scared. Most recently, Ukraine said it wants to use UK missiles to strike inside Russia, and the UK Foreign Secretary came out in support, saying, go ahead, no one's stopping anyone. As for Lebanon, the latest is that there's been a major bloodshed from the conflict by Israel, resulting in 492 deaths. As for Russia, President Vladimir Putin has issued many warnings already, saying not to provoke too much because Russia is ready to strike back, and it could even lead to World War III. I mentioned this in my previous video where Putin gave a heated warning about World War III. Most recently, Putin has issued another warning, saying there might be a signal sent out as a warning. It would be an actual nuclear launch, but the missile would be aimed at the Arctic, where there are no people. Still, even if it's just a warning shot, it's definitely not a feel-good situation. If someone actually launches a nuclear bomb, the consequences would affect the whole world. Even if you aren't hit by the blast itself, you could still be affected by radioactive fallout. You can check out more details in this video. If someone accidentally presses the button, yeah, nuclear weapons. War is escalating, intensifying, and no one is backing down. The more people fear war, the more likely it breaks out and becomes even more violent. This could push gold prices even higher. Another factor is the weakening US dollar, printing money aggressively and borrowing so much. If the dollar doesn't lose value at this point, that would be strange, because right now, just the US public debt alone has surpassed $35 trillion. And what's even more shocking is the amount of interest the US has to pay each year. Right now, it's as high as $1.2 trillion annually. And there's a real possibility that this debt might not even get paid off. And we have to worry. If the debt isn't paid and they just keep printing more money, the dollar will keep losing value, or it could end up in a default, which means the US would fail to pay its debts, and that would be terrible for the economy. This is a clear sign that the dollar is steadily depreciating, while the price of gold keeps rising, just as it has throughout history and is likely to continue doing. The more the dollar loses value, the more expensive gold becomes. Yes. Now, on the technical side, let's take a look at the gold chart. You'll see that gold has been rising in a way that there really aren't any resistance levels left because gold has already tested the key resistance. See this long line here where it almost reached 2000. The first time it tested was in 2020, then again in 2022, but it didn't break through, and again in 2023, still didn't break through. But at the beginning of 2024, it finally broke out, just like we've seen, making all-time highs a total of 6 times. Gold has risen 27% in 2024 alone. So there's a tendency that if gold manages to break above 2007, there's a chance it could reach $3,000 per ounce. And if it does hit $3,000 per ounce in Thai baht, that would be around 40,007 or 40,008 baht per baht weight, assuming the baht is strong. But if the baht is strong, that's also a good opportunity to buy gold. However, if the baht isn't strong and it weakens to around, say, 35 to the dollar, then we might get to see gold could reach 50,000 baht per baht weight just from the exchange rate. But viewers, there's no asset in the world that only goes up. There's always a chance for a correction. There's always a possibility that something unexpected could happen, something that doesn't go the way we think, and the price could drop. So this applies to every asset, not just gold. If you're thinking about holding or trading and you're not a trader who can really control your emotions, or someone who's truly skilled, really skilled, I really don't recommend short-term holding for any asset, honestly. But when it comes to gold, I can confidently say that in the long run, as long as this world doesn't stop borrowing heavily, doesn't stop printing money, and inflation doesn't go away, gold will definitely go up in the long term. But every investment carries risk, so make sure you study carefully before investing, no matter what your style is. Diversifying your assets is the best way to preserve your wealth. As for the current gold price, if you're like me, you just keep holding on to it. But if you want to sell for a profit, you'll need to figure out a way to get back in without taking a hit. Ultimately, it all depends on your own appetite for fun, risk, and how bold you're willing to be.